Good morning. All right. Welcome to our second webinar this week, Reporting Unclaimed Property, in which we'll be discussing preparing the manual online report. All microphones should be muted and cameras off. If you have questions, please type them into the chat and we'll address them as we go. If we do not get to your question, we'll follow up with you after the webinar has ended. This will be recorded and made available on our website. All registrants will receive an email with a link to the recording when it's made available on our website. If you would like a PDF of the slideshow or have any questions after the presentation, please feel free to email unclaimed@nd.gov. That's unclaimed@nd.gov. With that, I will turn it over to Susan.
Well, good morning, everyone, and welcome back for day 2 of unclaimed property reporting. Whoop, went too far. I hope you all had a good experience yesterday with the information that we covered. And so yesterday we talked about the fundamentals of unclaimed property and why we do what we do. Today we're going to get a little deeper into the weeds of actually preparing the report in the correct format. But first, I quickly wanted to review the steps involved in reporting unclaimed property. Number 1, identify the abandoned property that's on your books that belongs to someone else. Number 2, perform that due diligence. Number 3, report to the appropriate state. Number 4, remit to the appropriate state. And 5 is know the law of entitled states. And some of you won't have that step number 5, but some of you will. I know that some of you are probably wondering why it's so important to report directly to the state of the owner's last known address. And it's because the dormancy matters. Other states have different dormancy periods. Now, our dormancy period for a checking account or a savings account is 5 years, but I know there's states that are 3. So let's say that you are reporting a savings account using North Dakota's 5-year dormancy period, but the owner actually lives in, let's say, Michigan, and I'm making that up. I don't know what Michigan's dormancy period is, but let's just say, for argument's sake, that Michigan's dormancy is 3 years. So if you're going by North Dakota's 5-year dormancy and you report a Michigan owner to North Dakota after 5 years, it's important to know that we do participate in the reciprocal exchange of property with other states, but sometimes it takes up to a year for this process to be completed. So now that savings account that you sent to us after 5 years, it takes us another year to get it sent to Michigan, and now it's 3 years late getting to Michigan. We can't guarantee that Michigan isn't going to send you a bill for penalties and interest for the 3 years that it's late getting to Michigan now. I know that it sounds harsh and it's really unfortunate, but that is the way the laws are written. If it has a Michigan address, it needs to go to Michigan using Michigan's dormancy periods, because I'm not picking on Michigan, but they do have the authority to issue penalties and interests, the other states. So that's why it's important to report to the appropriate states, because the dormancy periods sometimes are different and they do matter. So North Dakota Century Code 47-30.2-22 outlines what must be contained in the report. First, the law requires that the report be submitted electronically. That's in the law, in the Century Code. Second, in the administrative code, which for us is 850302, defines that the report must be in the standard NAPA format and what owner information must be contained in the report. There are essentially two different ways to prepare a NAPA file. The first is to use a commercial third-party software. And the second option is to use the manual online reporting tool that is on our website. This tool allows you to enter your data directly, and the website will use your information to create that NAPA format. Regardless of how you choose to create your NAPA file, the data elements are the same. And you've heard me say NAPA format, NAPA this, NAPA that. NAUPA stands for the National Association of Unclaimed Property Administrators. And to get into a little bit of background about the report format, this started in the early 1990s. NAPA established and approved a set of codes in a uniform format to make electronic reporting more consistent across the states. Over time, improvements have been adopted, and at the end of 2002, the annual meeting of the Unclaimed Property Administrators adopted the newest revisions into a NAPA 2 format. In 2010, the format was further revised to add codes for newer property types such as IRAs or health savings accounts, those sorts of things. In 2013, new relationship codes and ownership codes were adopted with accompanying definitions. This standard format is especially beneficial to organizations who file reports in multiple states. I keep saying free reporting software is available, and it is, and you can find the link to that on our website if that's the way you choose to go. But now that we're talking about this NAPA format, I think that I need to mention that the original was just the NAPA format. The one we're using now is the NAPA 2 format. And brace yourselves, the NAPA 3 format is coming, and I suspect it'll be in the next year and a half or so that a new format is rolled out. Before we begin to create the NAPA file, there are 4 data elements for each property that will need to be collected. And they are, number 1, the starting transaction date, the property code, the owner type code, and a relationship code. Now we're going to take a few minutes to talk about each of these data elements and what they mean. So starting with the starting transaction date, this is what drives the dormancy period. In the NAPA format, where the starting transaction date is, like I said, what drives the dormancy. It's what calculates that for you automatically. If you use an incorrect date in this field, you run the risk of reporting late and or opening, if you run the risk of late reporting and opening yourself up to penalties and interest, or having your report rejected because the property is early. Early report, like we talked yesterday a little bit about reporting early. It is allowable, but you have to have written permission from the administrator prior to reporting. So if you use that, it is conceivably possible that if you use the wrong date and your report is early and we don't have that written approval, your report could get rejected. The next data element that we want to talk about is the property type code. The property type code is a 4-character type code that was set forth by NAPA, which most closely describes the nature of the asset or the account. The first 2 characters represent the category of property, and the second 2 characters further break down the category. So let's look at a couple examples of these. The list on your screen shows some of the most common property types that we see. It is important to know that this list is not all inclusive. And so what we would do is direct you then to the holder reporting manual on the website for a complete list. What you can see on this slide is at the bottom of each category. For example, the AC category is your accounts. That's your checking accounts, your savings account, your time deposit accounts. But what each one of these categories has is a 99. And what that means is that's the aggregate code. So if you have multiple properties all under $25, you are allowed by law to aggregate those and report them as a lump sum. While it's allowable under the law, we don't encourage this because if you aggregate those checks, we have no way of getting that money back to its rightful owner. We have the threshold of our website set to $5. So any property that we get that's $5 or greater is going to be published on the website. If you aggregate $20 checks, they don't show up on the website. So if you have 5 $20 checks and you report it as one $100 property, there's 5 owners that aren't ever going to get their money back. So in other words, if you have the detailed owner information, we want it, regardless of the dollar amount. The next data element we want to talk about is the owner type code. There isn't a lot of owner type codes, but the most common that we see are the 3 listed on your screen. AG stands for aggregate properties. So if you do lump those properties together and report them as a lump sum, you want to use the AG owner type code. If you have a property for which the owner is truly unknown, you'd use the owner type code of UN for unknown. Everything else is other, which in the system stands for all other properties except aggregate or unknown, which kind of seems backwards, but that just is what it is. So if they're not aggregate and they're not unknown, the owner type code will be other. The next data element is super important is the relationship code. And the relationship code is what it refers to the owner's relationship to the property. The most common relationship codes we see are listed here. A couple of things I'd like to mention about relationship codes are as follows. Like I said, the majority of the property that you'll be reporting will have a relationship code of SO, meaning single owner or sole owner. If you are an institution that reports cashier's checks or money orders or other similar written instruments, these are multiple owner properties and should be reported with both the remitter and the payee as owners. So the individual who is the payee would have a relationship code of PA, and the remitter would have a relationship code of RE. If you have more than one owner, the relationship code for both owners is AN, meaning and. In other words, if you have an uncashed check payable to John and Mary Smith, both John and Mary should be listed as owners, and both of those owners would have a relationship code of AN. And that becomes very important when we are paying claims. So if John he sees his name on the website and he makes a claim, we're not going to pay that unless we also have a claim from Mary. So that's where the relationship codes get important, is when we are trying to pay claims. Okay, so before we move on to the actual creation of the report, Are there any questions we can answer real quick?
There was one question here that I see in the chat. Who is responsible for reporting IRA accounts? Is it the company that sponsors the IRA or the administrator?
That is a great question. It's whoever has the money. Like if you were a third-party payroll processor and your clients all send you their payroll money and you're cutting the checks, it's the third party that has the money that has to do the reporting.
Okay. We have another question here. Trying to figure out on the earnest money issue, if left in account for 3 years and no one will sign off on it.
Okay. If you have a dispute over earnest money,
Or real estate.
yep, and you've had it for 3 years, you have had it long enough. You report that in the name of the buyer and seller. And then when they make a claim, they'll have to either agree to 50-50 or none. I mean, then it becomes, it's the liability is now ours, and we have to we step into your shoes, and if they can't agree, then neither party will get the money until they can agree.
And
Okay.
that is all the questions that I see for now.
Okay. Well, then I'm gonna move on. So just jot your questions down as you go, because this is where it gets really good. And I know I get a little bit animated about unclaimed property, and the only people that get excited about it are the people that do it. So I apologize. Anyway, so how to create that report. What I'm going to describe is how to actually create the manual online report. We'll talk about third-party software a little bit later. But the first thing you want to do is go to our website and hover over the white words, reporting property, and then click on, I need to create a report. So you want to click right here that says enter a manual report. The image on the left is the first page that you will see. To begin, you want to click on register. This action will generate your secret key. The website advises you to print the secret key, but I would, if it were me, I would take that one step further and copy and paste this thing right here, this miserable 27-digit code that it's horrible. I would copy and paste that into a Word document or a note or some place else that you can copy it and paste it into when you go to log in. After you have your secret key, click on continue. At that point, it's going to take you back to the login screen where you want to start here and click log in. One thing that it doesn't tell you, well, it kind of does, but your secret key is good for 45 days. So you can start your report, and if you get interrupted or you don't finish it, you have 45 days to complete that report. Once that 45 days expires, all of your data will go away and you will have to start over. Another thing about that secret key is it doesn't carry over from year to year. So each year you'll have to get a new one. So the next page that you'll see is the holder information screen. This is the business information, not your personal information. We actually have had reports submitted where the holder put their personal information in there, and then we couldn't match the report up to the money. So this is the business information. So as you go through the items one by one, number one is the holder name. Number two is your tax ID. Number three is a little box that says, yes, I did my due diligence. And the reason that this box is there, it's important because it captures the fact that due diligence has been completed and that you are agreeing that you have met all the requirements that are outlined as far as due diligence goes. Number 4 is the state of incorporation. Whoop, too far. Number 5 is the NAICS code, or NAICS. This is an industry type code that's used for compliance purposes. And there's a link here on the, you can't see me pointing. Right, there's a link here to a website that will help you find your correct code. Number 6 is the contact information. That's the holder contact information. Number 7 is the report year. The unclaimed property report year is a little different than what you're probably used to dealing with. The unclaimed property report year is exactly 1 year behind the fiscal year. So on July 1 of this year is when we will be moving into report year 2023. So today we're still in report year 2022, but next week will be 2023. The report type, most often the report, there's a drop down, you can select the appropriate option. Most often this will be an annual report. However, if there's an instance where you submit your report and your payment and you went, oh God, I forgot one, you can go back, you can create a new report and a new payment for that one property. And at that point you would select supplemental report. The other option that's there is an audit report. If you're submitting an audit report, you'll know it. As you work through the reporting process, the website will take you back to the report summary page. So this is kind of what you're going to see coming back at you as you work through this. For every property that you report, you're going to do 3 things. You're going to, number 1, create a record. You're going to add an owner to the record. And then you will add property to the owners. So if you have 5 checks to report, you'll create 5 separate records. And you can, once you create a record, then you add the owner to the record, and then you add the property to the owner. So let's see what this actually kind of looks like. So from your report summary page, you're ready to get started. You want to, the first thing you're going to do is create a record. Now that your record's created, you're going to add a new owner to that record. Now this screen shows you the owner information. This is where you add all of the required information of the owner. The required fields are marked with a red asterisk, but further, we would like to have as much information as possible. So if the field is not required and you have that information, we want it. The more information you provide, the better chance we have to return it. And if you notice, this is the page where the relationship code and the owner type codes are entered. And there is a drop down for each of those. And then when you have all that in there, you just click save. Once you click save, it will take you back to the report summary page. And here's where you click on the button to add property to the owner. So see, I added John Smith here as an owner. Now I'm going to add property. Then it will take you to a page where you add all of the property information. So for this fella, we're going to add a uncashed payroll check. This is the starting date, the date on the check. The ending transaction date is not a required field. The amount reported is required. If you have an account number, if your customer has an account, you would want to put that in there. The check number, if you have it, we want it. the description, this is a text field. So in this description field, if there's any relevant information that doesn't really fit anywhere else, you can enter it here. For example, I'm going to pick on the counties here for a second. If you're reporting an overage on a tax lien for foreclosure sale, there's nowhere else to record what that actually is. So if you just type that description here then we're the only ones that can see it. That won't ever show up on the website. But if there's any pertinent information that you want us to have, type it in that description field. Then you click save, and it's going to take you back to the report summary page. So from here, if you can add your second property, if you create a second record, then you can see that you can edit your records as you go through this. So once all of your records are created and all of the property and owner information is entered, it's time to do the final review. When you're completing the final review, you must check each of these boxes. It quite literally makes you review. Yep, I have 2 owners. Yep, I have 2 properties. Yep. Oh, nope, no tangibles, no shares. You have to actually click each of these boxes or it will not, this submit button will not show up. So make sure you, in step 1 of your final review, check all these boxes. Once you've reviewed, then simply click submit. And once you click submit, that's where it goes directly into our database. If for some reason you want a copy of your NAPA file, you may download it right here. If you, it's a duplicate thing to download it from here, and because you are already submitting it by clicking the submit button. So once you're satisfied with your report, then you click submit. Which brings you to the final review page. And there are a few things that you have to do here. Number 1, click this print summary button and keep that for your records. If you don't do it here, you can't go back and get it. Number 2, click here. If you wish to pay electronically, click here, and that will take you directly to our third-party payer of NCR, where you can submit your payment if your report is less than $10,000. And then click done. If you went out to NCR and made your payment electronically, you are done. So the next step is to remit that payment. And this is what you see when you try to submit electronically. First, you want to enter your tax ID and click search, and then it'll find your report, and it doesn't show you exactly, but it'll show you a little bit of what's there. And if that's the report you want to pay, you click select, and then it will take you to NCR. And I actually can't show you that without actually submitting a report. These screenshots are all from our training environment, and so that link doesn't really work. So the other option for reporting is if you use that third-party software to generate your report. If the option that I keep referring to is called HRS Pro. And so if you have many properties to report and you don't want to key them all into our website, you can use this third-party report. If you do that, when you create your report in HRS Pro, it does not automatically go into our database. So what you have to do is download the file from the software, and then you come back to our website and you click on upload a report. And it looks very similar to the first step of the online reporting. It takes you, so what you would do then is if you use that software and you have your NAPA file, it's going to be either a TXT extension or an HRS extension. Our website won't accept anything that's encrypted in any way. Using a third party is a great tool if you do have to report to multiple states. So you know, if we're located where we are and you have to report to Montana and Minnesota and South Dakota, if you use that third-party software, enter all your information, it's going to create 3 separate files for you. So if you are uploading a NAPA file, you click on the upload a report. It's going to bring up the holder information screen where you have to enter your holder information and then upload, and then you drag and drop or copy and paste your file. It's pretty slick, actually. Once you get the confirmation that your report is uploaded successfully, again, print that summary because you can't go back and get it, and then remit. And if you hover over the white words reporting property, there is a drop down for remit instructions. So they are there for you. I know everybody's just chomping at the bit waiting for this question. Negative reporting. Looks like my lines moved a little bit. As promised yesterday, I want to take a minute to show you where to file a negative or a 0 report. If you have nothing to report, you start at the same submit a report page and then click the upload a report button because I have created my NAPA report or I have no property to report. So when you click this upload a report, all you have to do is enter your holder information, and then there's a radio button at the bottom, and it says, "Is this is a negative report, yes or no?" And you click yes. And then the report type is negative, and then submit. That's all there is to it as far as reporting a negative. So now that you're all experts in submitting that electronic report, I just wanted to outline a few of the best practices. And these are probably not in any particular order, but number 1, provide all of the required information. That's usually where people get hung up. It'll throw an error that says you're missing something. So make sure you provide all of the required information. Develop detailed written policies and procedures. That's important, especially for those entities where there is a lot of turnover and that somebody else is doing it every year. So it's important to have those detailed written policies and procedures. And monitor the changes in unclaimed property laws. I know that's tricky and most of you probably don't have the resources available for that. But if you do, if you have in-house legal counsel, you might want to just grab their ear and say, hey, here's something else you should keep track of. But most importantly, just communicate with your owners. It's like I said before, we don't want this property here. We want you to get it back to them before it's required that you report it to us. Some of the most common reporting errors that you'll see or that we see is when holders inadvertently report too early or late. If it's in the incorrect format, our website will not let you upload an incorrect format. There are holders that try and upload a spreadsheet all the time and it won't let them. So it won't let you if it's in the wrong format. And believe it or not, when I started this in 2015, we were still taking paper reports, and quite literally the Presort would come with tubs and tubs of reports and checks that we had to go through. So the streamlining of the new website and things like that have really improved operations from us, and I think also from the holder's perspective. Another common error is an invalid property type. So if you choose the wrong property type, your dormancy period might be wrong, um, and which leads to incorrect dormancy dates. So just be super careful with your property codes and your dormancy dates. And here we have the reporting resources. So that unclaimedproperty.nd.gov, that is our unclaimed property website. So if you go under reporting resources, what you will see there is a link to our holder reporting manual. Once we get these recordings up and posted, then there'll be a link to the informational webinars, as well as step-by-step reporting instructions. Unclaimed.org is the NAPA website, and what you can find if you go to unclaimed.org is state-specific requirements. So if you have Montana questions or South Dakota questions, that's how you can find all of the states that you need to. And there's all kinds of holding resources that NAPA provides. And I know that, we still have a few minutes for questions, so I can see there's some in the chat. I will.
Yes, we do have a few. When using the relationship code AN for multiple payees on a check, do we enter the total amount of the check for each payee or split it 50-50 if 2 payees, or into thirds if 3 payees, and so on?
No, you will, the total dollar amount of the property is what you would enter. And all three, let's say there's 3, all 3 owners have the same AN. So don't split the money, I guess, is the short answer to that question.
Next question, in real estate earnest money reporting, if the cancellation and return of EM agreement is signed by both buyer and seller, would it then just become reporting for the buyer who canceled?
That's a question you might want to email directly to our inbox, because I'm not sure that I'll have to do some looking into that one. I don't know the answer to that off the top of my head. So if you wouldn't mind sending that to the info box, we'd be happy to answer that.
Okay. Next question, we touched on just a little bit, but I think other people might be also wondering, do they need to register every year to get a new secret key?
Yes, because your secret key is only good for 45 days.
Okay. Let's see. So it looks like we are supposed to report every year, even if we have nothing to report.
That is a best practice. And the reason is because there are industries out there where you will have, like, this year you'll have 1 check to report. Next year you have nothing. The following year you have 3 checks to report. And then the next year you have nothing. So if you don't file that negative report, it looks like there's gaps in your reporting, which is a red flag as far as compliance goes. So if you are completing a negative report on those years that you don't have things to report, it really shores up the fact that you are looking every year for unclaimed property.
Okay. Next question, in regards to dormancy periods, should an uncashed paycheck be reported after 1 year for wages or payroll category, or 2 years since it is a check?
Payroll is 1 year, even though it's a check.
And next question, if we have an uncashed check from a person who also owes us money, can we apply that uncashed check to the amount owed instead of sending it to unclaimed property?
I wish the answer to that was yes. But from an unclaimed property perspective, no, you can't. But what you can do is reach out to the customer and say, hey, we have this credit balance and you owe us. Is it okay if we apply this credit to your balance? And it's fine as long as you reach out to that customer and have a conversation with them. But if you don't do that, then the answer is no.
Another question, how much is the payment to submit electronically and how do they determine the amount?
The amount that you would remit is the total dollar amount that's on your report, and that'll be on your report summary. The threshold for our third party payer, and that's just what they have. I don't know, that's just the level that they set up with us is $10,000 because the good majority of our unclaimed property reports are less than 10,000. Um, and that's just the threshold that our third party payer chose. Does that answer the question? I'm not
So they would remit the payment in the amount of the report. And
correct.
yeah, and you can remit payment through NCR for free for amounts of $10,000 or less.
And that's a good point that I didn't bring up is that NCR payments are free for the holders. We pay the transaction fees on that. If you initiate an ACH wire or a credit or an ACH credit or a wire, then the holder is responsible for the initiation fees that might be associated with that wire.
And you can wire for any amount, is that correct?
Correct.
Let's see. What was the name of the third-party software again? I think we were just talking about that.
Um, it's called HRS Pro. Um, and if you go to we go back to this um, reporting resources. If you go to our website and hover over reporting resources, the link to that HRS Pro is there.
Okay. Another question, is there instructions on how to file once in the NAPA website?
Kinda. um, NAPA's resources on their website are kind of generic because they do represent all 50 states. And the unfortunate thing about unclaimed property is it's enough similar for you to get an idea of what's supposed to happen, but it's enough, each state is just enough different that it can be quite painful. But to answer the question, the resources on the unclaimed.org are generic unclaimed property because they do represent all 50 states, plus Canada and Kenya are actually members of our association.
Next question, how do I get a hold of Minnesota to report to them? I do have one check to a former client from Minnesota.
What I can tell you is just do a Google search for unclaimed property Minnesota. The way our website is set up, we are on a system is called CAPS, and it doesn't stand for anything. It really doesn't stand. It doesn't mean anything. But the majority of the states are on that system now. Minnesota being one of them. So if you do unclaimed property Minnesota, it's going to look very similar to ours. It's just a different color, and the steps are the same. The manual online reporting tool is exactly the same. It just might be tweaked a little bit for Minnesota. And I can tell you that maybe not Montana, Wyoming and South Dakota also are on the same system. So it'll look very, very similar. So if you go, let me see if I can find that slide. Any of the CAPS or the states that are on this same system as we are, when you go to the holder, oh, and one more right here. one more back, right here. When you go to reporting property on any of those cap states, either you have this enter a manual report and the meat and potatoes of it are the same as ours, or upload your report. It's very, very similar.
Okay, let's see here. Scrolling up here. Okay, what if you have an account with two owners, but each live in different states and both states have a different reporting period?
Go ahead and send those to North Dakota because you're a North Dakota holder.
And let's see, are we required to submit a negative report if we have 0 unclaimed property to report to North Dakota?
You are not required to, but we encourage it. It's so easy. It'd take you 5 minutes.
Next question, our business has unclaimed property, but it is under the name of a former employee as well as our business. How do we claim this property?
So we have, so you're saying we already have it in our custody and it's in the name of the business and a former employee?
Must be,
You must be, yeah, okay, so I
yeah,
guess I forget that I can't hear them.
yep,
If you're making a claim, for that property, both owners, so the business and the former employee will have to make a claim unless, so this happens a lot, as in insurance cases. Let's say there was a hailstorm last night and your car got hailed and you made a claim on with your insurance company and the auto body shop said it's going to cost $5,000 to fix it. So the insurance company issues a check in the name of wrecked owner's car and ABC Auto Shop. If that auto body shop doesn't do that work, um, you still have to report it in the name of the owner and because there's a lien on that car. So you have to report it as in the name of the owner and the auto body shop. What happens when the claim is made? The owner of the car has to reach out to the auto body shop and get a letter that says, yeah, we didn't do that work. They don't owe us anything. At that point, we can take the auto body shop off of the claim and pay the full amount to the owner, which is maybe kind of the situation that you're talking about here. For whatever reason, it's in the name of the business and the owner. It's conceivable that the business doesn't really have any ownership in that property because they, whatever the circumstances are. So then we would need a letter from, if the business is making a claim, we would need a letter from the former employee that says, nope, they don't owe me any money anymore. Just give it to them, or vice versa. If the business says, nope, we don't actually owe him any money anymore, he can have it all. Hope that was helpful.
okay. If we have time for a couple more, there are a few more questions.
Yep, let's do it.
Another question, I think you might have answered this yesterday, but what transaction dates are correct for reporting 2023 unclaimed property?
So anything that meets the dormancy period on or before June 30th of 2023, right? So any checks that turn 2 by June 30 of 2023. So whatever's meeting the dormancy period at the end of this week, it depends on the type of property, but any checks that were written on or before June 30 of 2021 is what's due.
Okay. How can we get a copy of yesterday and today's PowerPoint? If you would like a copy of the PowerPoint from yesterday or today, you can email unclaimed@nd.gov to request your copy, and we will email that to you. Let's see. Is the $25 or more due diligence threshold for each property or total of all properties to each owner?
That's a good question. You don't need, if you have, I would not send 3 letters to one owner. I would lump them together in the letter and say, you know, we have these 3 checks, either cash them or contact us. But I would not send 3 letters to the same owner. I mean, you can if you want to, but I
Okay.
wouldn't.
Next question. What do you do with money less than $25?
You still have to report it. You just don't have to send the due diligence letter.
Next question. Also, if an owner is deceased, but you have located possible relatives and send them a letter, do you still report the owner's unclaimed property if they met the dormancy period, or if the relative reaches out to you to work on transferring the deeded property, do you hold off? And they are specifically referring to deeded property, so the relative would have to do their legal requirements to get us the documents needed to comply.
If you're already working with the heirs to get that property taken care of through the legal channels, I would hold off, because ultimately it'll get transferred into the other folks' name, and it's it if you're already in the process of taking care of it, then you have, what you have then is documented owner generated activity. And so it it's no longer dormant if there's owner generated activity, because the ownership changes. I hope that was a long answer to a s- a question, but if the heirs come forward and you're already in the middle of the process of, then you have documented owner activity and it's not dormant.
Okay, next question. I work in property management. Am I able to submit a report only under our management company for all our properties, unclaimed property, or does each property need to submit their own report?
If I understood that question, what I heard was if you have um, multiple apartment complexes that the management company is operating, you can submit one report for the management company. You don't have to report for each building, as long as they all operate under the same FEIN. But if each building has its own FEIN, then you would have to do multiple reports.
Okay. Let's see. That is all I see for questions. If we have not addressed your question, please feel free to reach out. Just send us a question at unclaimed@nd.gov, and we will do our best to answer that for you.
All right. Well, thank you, everybody. Enjoy the rest of your week. And as always, if you have any questions, please, please, please reach out, because, like I said yesterday, I understand the minutia and how frustrating it can be. And so we want to, if you're uncomfortable, give us a call, because we want to make sure that you're comfortable with what you're doing.